Good morning, everyone. TGIF to everyone. We're going to get into this money today. We're going to cover EVgo and as well as Chargepoint. And I'm going to let you guys decide which investment is essentially best for you. I believe that both of these stocks will do well in the coming year as the infrastructure for electric vehicles really start to be built. I don't know if that's going to be part of the Build Back Better plan. I have no idea. But nonetheless, there's money to be made in the EV space. And I'm going to hop on this throughout the year because I think there's a lot of money for you guys to truly get into. So let's cover this. All right, without further ado. So with that being said, EVgo has been down almost 10% in the past year. In the past 3 months, it's been up 22%. The past month it's been down around 19%. The past week down around 6.5%. And in the pre-market today, it's been up around 1.5%. Now, if you guys are not familiar with EVgo, it operates electric vehicle charging station. It offers EVgo network, home charging solutions, so you can charge your electric vehicle at home, working charging solutions, so you can charge your vehicle at work, and freedom station plans to electric car owners. Okay, the company is headquartered in Los Angeles, California. It was founded in 2010. The market cap is $2.5 billion, and the 52-week low is $7, and the 52-week high is around $24, and the current price is around $9.67. That shows a lot of volatility in just 1 year, but we have to probably get into the history of what occurred throughout the year to see what make that stock very, very volatile. Okay, we know that a big portion of this, ladies and gentlemen, has been the shortage of semiconductors. It has affected the market altogether. When I mean the market, the stock market, and every stock that's listed, whether it be the New York Stock Exchange, the S&P 500, or the NASDAQ. Okay. What else? So Robinhood analysts are stating that buy at 55.6%, hold at 33.3%, and sell at 11.1%. See here in the third quarter filings, what we're going to look at, they did very, very well in their quarterly earnings for the third period. So we're going to look at that as well. Okay. Let's go over to Chargepoint. So Chargepoint, ladies and gentlemen, has been down last year 57.5%. The past 3 months, down 3.5%. The past month, down, this rounded up to 20%. Past week, down 10%. And today, there's down as well. So automatically, what you guys are probably looking at, you're thinking that EVgo may be the better buy, okay? Now, this is a two-part answer. I believe that EVgo would be the better buy right now, but long-term, I believe Chargepoint. So essentially, if you want to be in the EV market, not just the electric vehicles, but as well as the charging stations. So this is where you can essentially buy EVgo with options and buy Chargepoint long-term investing, whether it be in your stock portfolio, or you can put them in your ETF and also your index funds if you find funds that actually carry those particular stocks. And for you guys who are not familiar with Chargepoint, let's cover that as well. So we see Chargepoint Holdings operates as an electric vehicle charging network provider. It designs, develops, and markets network electric vehicle charging systems, infrastructure, and its cloud services enable consumers the ability to locate, reserve, authenticate, and transact electric vehicle charging sessions. The firm provides an open platform, provides real-time information about charging sessions. Okay, that's enough. They started off in 2007. Their market capitalization is $5.7 billion. The 52-week low is $16.89, and the 52-week high is at $46.30. Their current price, ladies and gentlemen, is at $17. So one thing that we see consistent with both of these EV charging companies is that they had so much volatility here in the past year, and a lot of that is directly and indirectly root cause analysis tells us that the semiconductor, the quote unquote microchip shortage, has been a big part of a lot of the EV vehicles as well as the EV charging stations doing bad. But nonetheless, both of these had really great Q3 returns. Okay, so let's look at that as well. Now, analysts on Robinhood is stating that buy at 64.7%, hold at 35.3%, and sell at 0%. So in comparison to EVgo, we already see that analysts believe that Chargepoint would do better over the course of time versus EVgo. Okay, and we look at the quarterly earnings, we see that their Q2 and their Q3, as well as their Q1, has laterally continued to make gains versus going down. So that's some consistency that shows you some solid returns. And we look at some of the other competitors in the market, like Blink Charging. That's another EV charging infrastructure company. And then Lucid Group and Neo, we know, are EV vehicles. Now, when we go to EVgo, we look at the 12-year forecast. They say in here at the low, it will reach $11. And currently, EVgo is at $9.67, but they're stating at the low point, they will at least reach $11. Now, the median, which I take to be the most accurate prediction or forecast rather, at 98.1% to $19. So essentially, if you invest in this stock, I believe there's a strong possibility you can make $10 off your investment. And at the high, this stock is going to reach around $22. When it comes to Chargepoint, currently Chargepoint is at $17.39, but at the lowest of the stock forecast over the next 12 months is $20. So you can roughly make around $2 or $3 there. But at the median, which I hold at the hallmark of all stocks, at $30.50, an increase of 74.9%. So we're looking at around $11 to $13 of an increase in profit for your portfolio. And at the high, we're looking at $46 per share. So automatically, I already see that there's a stronger possibility of you making more cash with Chargepoint. Now, granted, you're going to pay $17.39 a share versus EVgo. You're only paying roughly around $10 a share. So it depends on where you want to be at. But again, I want you guys not to look essentially at the stock price, because I know there's like an $8 to $9 swing, but most people are looking for investment under $20, under $25. And I want you guys to make a decision on what you believe that is more profitable. Okay. Now, as we're looking at these two, this is on stocknews.com, and they're stating this. I didn't want you to cover the whole entire story, but it says EVgo is just starting out, making the latter significantly riskier given its lack of financial visibility. The commentator, not the commentator, but the news reporter here also says, I believe Chargepoint will be one of the top bets in the electric vehicle space due to its top line growth as well as improving bottom line. Now, I'm just going to let you know I agree with that. I believe Chargepoint is the most solid investment. And when it comes to long term, because they're building their infrastructure very, very rapidly and very solid, and they have a lot of partners. But EVgo still has a space. They still have a bit of the market, and they're making partners across the US as well as overseas, just as Chargepoint. But again, I want you guys to make a decision here, because me personally, it depends on how you structure your investments, right? If you're going to go with EVgo, I believe that option trading will probably be your best bet. If you want to do calls or puts, again, that's another video. We will have to look at the trending analysis of that. When it comes to Chargepoint, I'm going to put those things in my portfolio, either be individually or through an ETF or index, and I'm looking long term. Because again, this is going to happen. The electric vehicle market will essentially take over fossil fuel vehicles. Now, I can't tell you within the next 10 years, but I'm thinking in the next 30 years, hopefully I'm still around, in the next 30 years, you probably see anywhere from 40 to 50, if not 50% of the vehicles on the road are EV, because it continue to push the pendulum and innovation of making solid electric vehicles at a cheaper price, right? We're looking at the 35 to even 30,000 price range of them making electric vehicles, okay? So let's move on. I want you to see the partners that EVgo has. Now, as we're looking here, EVgo works with automotive partners like Nissan, BMW. So let's just take it, for instance, Nissan, Japan, BMW, Germany, Chevrolet, America, Tesla, America, Kia, Korea, Ford, America, and Honda is also Korea. And it says here to offer EV drivers enticing charging solutions, and access to the nation's largest public fast charging network. Okay. Again, they're gaining traction. So currently, with the numbers that we have, it looks like Chargepoint would do better, but that doesn't mean that EVgo won't do better than Chargepoint over the course of time. See, these things you have to kind of track, you have to follow, you have to keep them on your radar. That's why in stocks and portfolios, people have watch lists because you want to watch those stocks. You're like, hold up. And then news is one of your biggest indicators of what the stock has done, what it's currently doing, and what they predict and or forecast of what it's going to perform at. Now, moving to Chargepoint. Chargepoint has a partnership with Mercedes. Now, granted, EVgo has a partnership with BMW and all those others like Tesla and Nissan and BMW, etc. But now, Chargepoint also have sort of a partnership somewhat with Tesla. It says charge at Chargepoint Level 2 station using the adapter that came with your Tesla. See, the one thing about Chargepoint is that you can charge any electric vehicle at their charging stations. Now, the one thing I haven't researched, I would probably have to get into, is the Rivian R1T, that electric vehicle pickup, not the Ford Lightning, but the Rivian R1T, which I kind of like over the Ford Lightning. But nonetheless, that is also Lucid Air. I'm pretty sure they either have the adapters or they will have the adapters. The electric vehicle car market is the wild, wild west. And I'm going to tell you why. It doesn't matter what vehicle you have. I could have a Toyota Corolla and you can have a Maybach. You can have a McLaren. You can have a supercar. You can have a Aston Martin DB97. You can have a Rolls Royce. And we all still use the same gas. We all still have the same input to our vehicles, meaning there's a hole in your vehicle and you put a fuel sprout inside of it and you just fill it up. All these electric vehicle car makers have these different connections to charge their vehicles. It's kind of like Apple and Google. You know, Google is using USB-C to charge their phones, right? And then Apple is using the Thunder Lightning port or whatever. So essentially, we need adapters throughout all these EV stations in order to charge those vehicles. That's just something to look out for. And as I stated before, we're going to get into the quarterly earnings of EVgo. And EVgo revenue increased to $6.2 million for the third quarter of 2021 compared to its $4.8 million for the second quarter of 2021, exhibiting a 29% quarter over quarter growth. Okay, so that's significant. That's very, very good. When it comes to Chargepoint, for their third quarter, revenue was at $65 million, an increase of 79% from $36.4 million in the prior year same quarter. So when you look at the way these are both worded, and I don't know if you guys caught it, let me show you one more time so I can show you. It says here that in their third quarter of 2021 increased to 79% from 36.4 prior to the same year. So they're not going quarter to quarter, they're going from year to year. So they've increased it 80% over the course of time. Now, let's go back to EVgo third quarter. They're stating that revenue increased to $6.2 million for the third quarter of 2021 compared to $4.8 million from the second quarter of 2021, exhibiting a 29% quarter over quarter growth. So again, one is comparing year to year, and then the other is comparing quarter to quarter. Again, this is an information video where I believe that either one will make you some great cash depending on the amount that you actually invest. You also have to look at your ROI, and then you also have to look at the amount of time that you guys are willing to have your money in these particular stocks. If you're looking at your portfolio and it's stagnant, right? You see it teetering up and down, right? You don't really see growth. You see lateral. You see a lateral change, not a lateral change, but a lateral movement in your portfolio. And you are not a person who likes to wait for growth, meaning like, yeah, I know the stocks are going to bounce back, you know, within the year, but I want more action, right? And to me, it really depends on your lifestyle. It depends on if you are just an investor, whether you're a day trader, swing trader, long term, or maybe you are an option trader, a scalp trader. However you go about trading, to me, depends on how you should be viewing your portfolio. I know people who have the time to sit in front of the computer 2 or 3 hours a day and just trade. More times than not, that's a day trader, and they're probably dealing in large volume of stocks, whether it be option trading, okay, option trading, or whether it be individual trading. And they may use platforms like Think or Swim or Fidelity, things that have a lot more analytics, or even WeBull. Because me personally, if you're getting to option trading, ladies and gentlemen, Robinhood is a great starter, a base platform for you to start learning how to option trade. I will also encourage you to take a beginning free class on how to option trade, so you kind of understand certain methodology, ironclad. They have all these different strategies you guys can learn, and then that way you can get up early in the morning. Maybe you take a break from work, or if you just trading yourself, so you can make large sums of money. But again, people always ask me, how much should I get into the market with? And that's up to you. How much money do you have to spare? This is my mindset. Back in the early 90s, we heard a lot of people investing money that they couldn't afford to invest. Here's my take on investment when you start investing as a beginner. Only invest money that you can essentially lose. I don't want you to think as a stock market as gambling, because it's not. It's totally different. It's a lot more complex than that. But starting off, any money that if you lost, it wouldn't change your lifestyle, right? That is the money I believe you should start to invest. You should allocate that money each and every month. Because I tell people more times than not, I can, by looking at your monthly budget, the monthly spending that you do, I can save most people just by looking at all your expenses anywhere from $100 to $300. Okay, there are some special cases where I can't free up any money for people, but just looking at what you can cut out, you can invest that $100 to $300 in the stock market on recurring investment, also known as dollar cost averaging, and that's how you should start off. Like if I can't break your routine of not buying your coffee at Starbucks or any other of these external coffee places to your home, or going out to buying lunch every day for your work, right? Then there's some sacrificing that needs to be done, ladies and gentlemen, if you want to quote unquote level up, if you want to essentially start investing. Because listen, saving alone will not get you where you want to be. Saving alone won't do it. Your 401k matching it won't do it, right? A lot of people just believe if I match what my employer is giving, so my employer gives 5%, so I'm gonna do 5%. If you can do more, you should do more. But I believe that you shall also be trading and investing on the side of your 401k. Because if you haven't done your price projections of, I'm a retired 65, I am investing every month $250. My employer is matching at 5%. When I reach the age of 65, I'm only going to have $750,000. Well, if you look at the new, the new forecast of how much you need to actually retire, we're talking around $2 million in order for you to retire of the life expectancy, because the life expectancy of an American is 80 years of age. So if you take from 65, you got 75, you have to live off the income that you invested, earned, and saved, right, for 15 years based upon the life expectancy of 80 years of age. Now, of course, you guys should be setting up wills and or trust to leave to loved ones and other people. Me personally, I'd rather for you guys to have a will than I'd rather for you guys to have a trust than a will, because wills can be caught up in probate, which is court, and be fought over during your passing, versus a trust is more of an ironclad for the person you want to get your assets and or properties. This is Financial Literacy 101. Ladies and gentlemen, you guys have a great week. Tonight, I'm doing my quote unquote non-cigar talk. My wife gave me a challenge not to smoke any cigars for the rest of the month. It's not like I'm addicted, babe. I'm not going to smoke any. And I'm not going to have any adult beverages tonight either, because again, she said no cigars, no drinking. I said, okay, babe. It's not like I'm tapped in and I'm addicted. Nonetheless, good morning, Mitchell Liggins. You guys have a great and wonderful day. I see you guys this evening. This is Financial Literacy 101. Learn money and be inspired.